Hey guys, Akil Stokes here, Forex trader, trading coach, and one of the co-founders of Tier1Trading.com, and welcome to another weekend edition of the Trading Edge video. Today we're going to take a look around the markets. We're going to talk a little bit about stock investment as well, so a jam-packed episode. But before we get started, do me a favor, hit that like button, share this video, and if you are brand new to the channel, make sure you subscribe. All right, let's get going. All right, guys, before we hop into the charts this week, I want to give you a little bit of an update on how my trading year has gone. I think that's very important, and not from a sense of we're trying to brag and say that we're super traders. We're definitely not, and you can make all this money really quick in the market, but rather because we believe in giving a transparent view of what trading actually looks like. And I know when you venture around the internet, everyone wants to brag about their wins. No one likes to talk about their losses. I think it's important for a newer trader to see the reality because they know what to prepare for. And understand that when we say consistently profitable trading, because that's the goal, that doesn't mean every single trade is profitable. It doesn't mean every single day is profitable, every single week, even every single month, right? It ebbs and flows just like a trend in the market. If you take a look at my equity curve right now, you can see we go up and then we go down. We go up and then we go down. And I think if you can accept that and you can understand that, it helps massively with your trading psychology. I haven't put this video out yet. I'm probably going to put it out next week as I head into vacation, but keep an eye out in this space for a video talking about how fear and greed affect your trading. But if you look at the trading journey so far, and I haven't updated you guys in about 2 weeks, right? We started off the first half of the year. Let's put it this way. If we were to split my trades in half, right? I've taken about 22 trades this year. So we split the first half and the second half 11-11. The first half, I went about 9 for 11. I told you guys I'm on fire. This is amazing, but it's not going to last because historically I'm a 55% trader. And a lot of traders came out and said, oh, Akil, you shouldn't be so pessimistic. You should be optimistic. And it's not being pessimistic or optimistic, guys. It's just being realistic, right? I know what I am as a trader. Yes, there is wiggle room, right? I've had years where I've hit at 65%. I've had years where I've hit at 40%. But typically, I'm about a 55% trader. How do I know that? Because I consistently trade the same system and strategies, and that's what they produce historically. So I'm pretty confident that'll be somewhere in that range. So when you see stuff like a hot start, it's not a negative. I'm still taking trades. I'm not, missing out on anything, but I understand in my mind that at some point we are going to revert to the mean. And we've seen that over the last half where I've gone about 6 for 11, which is a lot closer to my normal range, right? So I started off maybe like 80% overall. Now I'm at 68%. So this is normal. What's important is, again, is you stick to the plan, you stick to your risk management rules, and even as you're losing trades, right, because win percentage doesn't really matter all too much, you're still putting yourself in a winning position. And if you take a look at the last, what is it, I guess, let's start with these red numbers right here. The last 1, 2, 3, 4, 5, 6, 7 trades, you can see I have 4 losses in there. I've got 3 wins, right? So under that 50% clip. However, it's still a positive stretch, right? So despite you looking at this and saying, oh, more losses than wins, there was profit produced. The wins outweighed the losses. And that's why we say that a great trader, a good trader, is a great risk manager, even if you're not hitting at a high clip, because you don't have to. If you're managing your risk correctly, you're still going to be able to inch in the right direction, even when you're in those kind of quote unquote cold streaks. So I think that's important to look at, again, especially for a new trader, kind of understanding what the journey looks like instead of just seeing the end game of, hey, I made a 50% return this year, looking at the day by day or really week by week kind of ups and downs and becoming comfortable with that. And that will do massive for your trading psychology. Again, I plan on putting out a video later this week because I don't think there's going to be a trading edge next week. I got to head out. Maybe I'll do one Saturday. I don't know, but check the YouTube channel maybe midweek for a video talking about greed and fear and talking about risk management and how really simple mistakes can really destroy your trading. That's going to be an important lesson for all of you guys. So let's get started. Let's get these statistics out the way and let's get started on the charts today. We're going to start with dollar yen. There's not too much on my radar this year. Oh, one thing I would say that's interesting, just to touch on the stats real quick. 3/4 of my trades this year have been pattern trades, and that's a massive amount in comparison to last year, right? Pattern trading is one of the techniques I use. I also am a structure trader. I do a lot with trend continuation, counter trend, all that fun stuff. Really just I like to call myself a price action trader. But it's interesting, and I'm beginning to question, why is your portfolio so pattern heavy this year? And the answer is, that's just what the market has given me. Right, we've seen some directional movement lately, which is great because it's opening up the ranges on these pairs and offering a lot of opportunities. But due to these coronavirus scares and whatnot, we've also seen a lot of consolidation, a lot of fear in the market where between those sporadic impulsive moves, the market is really kind of uneasy and uncertain about what it wants to do. And because of that consolidation, there's been limited opportunities for the other type of trading styles that I trade. And that's okay. That's why I have pattern trading in my arsenal, because it allows me to take advantage of the quote unquote choppy times in the market. And then once the market is out of those choppy times, I can use my other strategies and techniques to take advantage of those times. So it diversifies what I can do in the market. So I'm not just sitting on my hands waiting for a half a year to get an opportunity. If the market's in this type of condition, I can use this. If it's in that type of condition, I can use that. And it gives me a lot of options as far as how I can attack the markets. Now, we're not going to talk a lot about any pattern trades today, but we do have a structured trading opportunity here on the dollar yen, right? So we start with our IPDE process. This is the 4-step process we always go through in trading. Identify, predict, decide, execute. I spoke to a guy on Instagram the other day who was a little bit confused about when to change your analysis and looking at single candlesticks, and if it doesn't go in the direction of your trade, excuse me, doesn't mean it's going to go the opposite direction. And long story short, my answer was learn how to read price. If you learn how to read price, you don't have to worry about flippity flopping between are we bullish or are we bearish. Go through that process and you'll know what side of the market you should be on each and every time. Doesn't mean the market will follow through. That's an entirely different story, but you'll know what you should be looking for. So, for example, when we look at this trade on the dollar yen, if you go through our IPDE process, identify, guys, do it with me. Where is price action trading, right? What has price action done? Where is price action trading? What would you guys say? I think we can all agree that we are at a level of previous structure support, right? Look left, structure leaves clues. Now, we are not the lows of that level, so we can potentially still push down, but I think we would all agree that we're not necessarily, well, I shouldn't say that. We're not going to all agree, but I think many of us would agree that at this point in the market, you would not be looking to get short. You don't necessarily want to sell at the floor, right? So your bias is that, hey, I'm looking for long opportunities until or unless this level of structure is broken. Once this level of structure is violated, then we redo our IPDE, we reset our analysis and see what the next opportunity is. But at this point, we should only be looking for buying opportunities. And what that allows us to do is really cut our energy in half instead of kind of splitting our energy between looking, oh, how can I buy? How can I sell? How can I buy? How can I sell? We're only looking for buying opportunities here, which allows us to focus more power on that. So let's go down to a 4-hour, right? And what we're seeing is we're starting to see a little bit of a slowdown here again. And this happens at the end of the week, but a little bit of a slowdown, meaning we had 1, 2, 3, 4, 5, 6, 7, 8, 9 bearish candles in a row. Then we start to get a little bit of indecision, right? We start to get some doji candles. We know that these doji candles, candles that have wicks on either side of them, right? It means that there was a test to the upside, there was a test to the downside, and ultimately price closed somewhere in the middle. So kind of a stalemate, an indecision. And what you look for in these indecisions isn't necessarily a reversal, and that's the key thing. You don't want to look at this and buy it right away because it doesn't mean a reversal. It can easily pause and then continue in the same direction. But this should give you a little bit of a clue that, hey, the market is kind of thinking about this, right? Thinking about this level. There's not the same type of, in this case, selling pressure that there was before. I want to be on alert for a potential reversal. And then we go through that if-then thought process or if-then syntax of, okay, well, if price action gives me this type of setup, then I'm going to look for a buying opportunity. So that's what I would look for here. If we are looking for a buying opportunity, I would shoot for, if we do get the buying opportunity, I would shoot for about $1.07, 107 is up here. That's our previous level of structure. You can see market came down and kind of did the bouncy bounce. This is a horrible color to do with red and green charts. There we go. Came down to this level, our previous outside return, right? That's the next place I would expect price to come to. And we can also kind of zoom out and look left and see if there's anything else there. If you want to be a little bit more conservative, perhaps even shoot that down to about 106. 50s, right, to give yourself a more conservative level. It looks like a 50% retracement as well, so maybe that gives you some confluence there. Look at that, boom. So definitely looking for buying opportunities here on the dollar yen as we come to previous level of structure. You do want to keep in mind, I wouldn't be super aggressive at this level because we can still push lower, right? The lows of our structure are all the way down here at 104.40s, and we're trading at 105.30. So there is still room for price to push lower. So whenever I see a situation like that, I want to be more conservative with my entry approach because I want the market to give me more and more clues that what I'm predicting is likely to happen versus, you know, say if we had a pin bar at the lows, and it allows me to be very aggressive because, you know, we're at a much safer level. So dollar yen, certainly something to pay attention to. Let's head over to Euro Aussie next. All right, Euro Aussie here on the daily. And this is an interesting scenario, right? At first glance, you're looking at this and you're seeing double top, and you would be correct. And double top is basically a retested structure. So price hits a level of exhaustion. We retrace off of that. We retest it for the second time, and we also hold. And this is typically a counter trend trading opportunity. But we always talk about this with our trading, right? It's not the what, but the where. And the question is this a double top in an area in the market that I want to trade? And in order to answer that question, we need to take a higher time frame perspective and look at the weekly. And if you notice this double top, what did we recently do, right? This is that IPDE process again. We have recently broken previous structure highs, right? So we put in a higher high, higher close. That allows us to make the prediction that price is likely to go higher. So we're not necessarily looking for a counter trend trading opportunity, a selling opportunity, as we're in a position where we predict that the market is likely to go higher. So rather, I look at this as a potential trend continuation opportunity or a potential buying opportunity. And I want to ask myself the second part of my prediction. If I predict that price is likely to go higher, where do I think price is likely to go higher to? And just using basic structure analysis, the first level on my radar would be about, let's just call it 72.50s, right? It was a higher level as well, up at like basically $1.80. But let's say 172.50 is going to be that conservative level, that first level that we can shoot for. We can always get more detailed later if the opportunity actually starts going in our direction. But at this point, I just want to give myself an idea of not only what do I predict, what direction do I predict the market to go into, but is there room for me to actually make profit out of it? And this week in the market, we had a lot of opportunities. We had a very good opportunity. I think it was the pound dollar, where we had a trade set up on our radar. No, it might have been the pound yen. We had a very good trade set up on our radar, but there just wasn't the opportunity for expansion. So we did all the analysis, and it's like, well, yeah, we predict it's going to do this, but only to this level, and that doesn't really give us a good amount of profitability. So we had to pass on that trade. So that's what we're doing with the prediction. We want to make sure that the market has room to move. And again, 72.50s would be that first level. So what I'm looking for here, as we go back down to the daily, is actually a violation of this structure level, right? We want to see a violation of these highs. If we get a violation of these highs, let me bump down to the 4 hour, there we go. If we get a violation of these highs, this is going to not only confirm that we're more likely to see bullish movement versus bearish movement, but it's going to give me an opportunity to get involved as I personally look for a pullback and an extension up. Now, there's many ways you can do it. You can, if you're a breakout trader, you can put a buy stop above here. That's another option. Just me personally, I don't trade that aggressively. I want to see a violation. I want to see a pullback, and then I like to get involved in the pullback, which typically gives me an opportunity to get involved at a much cheaper price, which opens up room to, again, that ultimate profit area. So again, this is one of those things where, and I speak to so many traders about this, they're just not comprehending the point, I guess, where it's like we are predictive in our analysis, reactive in our execution. I think people get caught up over the prediction part where it's like, oh, Akil, you're predicting that's going to go up, so I'm going to buy it right now. And it's like, no, that's the dumbest thing you can do, right? You can make a prediction, but then you're waiting for price to, I don't want to say confirm that prediction, but give you clues that the probabilities are on your side, that your prediction is more likely to happen than not. And then you're pulling the trigger. And I think so many traders are losing money because of that. They go off this feel or this think, and then they automatically react on it. And, the market never ever gives them any type of clue that it's actually going to go in their favor, but they're already in the trade and they lose money. Whereas a trader with a professional mindset, they look at it and say, okay, well, I guess that prediction didn't work. Erase the charts, right? If you talk to any traders, right, tier 1 traders, we do this in live room all the time. Talk to traders on the chat, right? They'll tell you the majority of the time that the majority of your analysis doesn't work out. And when I say doesn't work out, I don't mean you're losing money, but the majority of the time you're doing all this analysis, start of the week. Oh yeah, I think it's going to do this, do this, do this, do this, right? For example, we're going to, if we break above here, then I look for retest. If we get retest, then I look for higher high, higher close. If we get higher high, higher close, then I trade it up. And you got all this cool analysis on. You're all excited because you're 4 or 5 steps ahead of the market. And then what does the market end up doing? Market ends up doing this, and you're like, okay, well, that's not going to work out. Why? Because this gives you the opposite signal, right? The violation of these lows takes away from that opportunity. So the trader that kind of entered right away because of this magical prediction, they lost money. Where the trader that didn't, they're just like, okay, well, right click, remove drawing objects, start all over, redo the IPDE process. And that's massive because the easiest way to make money in the market, write this down, guys. The easiest way to make money in the market is to reduce how much you're losing, right? It's the same thing with like the secret to wealth, right? The secret to wealth is very, very simple, right? It starts with spending less than you make, right? So if you're someone that finds themselves, maybe in the hole each month and you want to make more money, but you're not willing to go out and get another job or work more hours, there's a very simple way that you can make more money. Reduce how much you spend. Right? It's addition by subtraction. The market is the same way, right? I showed you guys a spreadsheet earlier with those losses on it, right? I used to be a 70% trader at one point, and I was losing money. Do you know why I was losing money? Right? Because even though I had a lot of wins, I had all these reckless losses. They were bad, and there was all types of trading mistakes in them, right? But I was doing dumb stuff like that. My trading turned around when I just stopped, well, not stopped, but I eliminated the majority of my mistakes. I eliminated the dumb stuff that I was doing. And before you know it, I was keeping more of my profits, which made me a much more profitable trader. So that's the key to look for here, a higher high, higher close. This is going to be an option as well. Again, the reverse is going to be an option. I haven't looked at it this way because I typically get stuck in my bias. I don't know how much room is to the downside. But I suppose this. It's a little bit risky here, but there is opportunity. If we do get that lower low, lower close, if we do go in the opposite direction, if we violate these lows, this is an option, again, for a 2618 type of trade. Now, again, you're going to have to be honest with yourself on where you predict the price to come to. If you're looking at any of these inside spikes right here, you're probably going to be eliminated. But if you're looking down at this most recent new structure high here at around 165.90s, let's just call it 166 even, there may be some opportunity for you to trade it down to this level. Another option is this too. This is kind of really ahead of ourselves, but if we continue to go sideways, this is going to end up being a high and tight flag. And then you can do stuff like what we teach in breakout patterns, where you can actually position yourself at the bottom half and look to see if you can take advantage of a bigger move to the upside, whether you're trading it across the range or trading it up to that higher level, and set yourself up with a really good risk reward. So we'll definitely keep an eye on this pair as this is the Euro Aussie again. We'll definitely keep an eye on this pair as the week goes on, as this has plenty of opportunities. But the main thing I'm looking for is that move higher. So the violation of this level of resistance is going to be key for me. All right, so I was going to look at Canada yen and then the dollar index. So they both have very similar opportunities, but they're really no different than the dollar yen that we talked about earlier. So I can let you guys look at it on your own, but we're looking at counter trend trading opportunities. Again, price action coming down into previous levels of structure and then looking for a bounce. I don't think we need to do the same look again. Congrats to you guys on this cipher, by the way. Gave you a little bit of pain at the top and then rolled over tremendously. But speaking of stocks, right? Because this is interesting. And I was talking to, again, I had a presentation yesterday, and at the presentation, one of the topics that came up was the coronavirus and this massive fear that's going on. And I don't think I put this podcast out to you. I think it's sitting in the hopper somewhere, but it was a podcast episode I recorded from a discussion I had with our traders last year, just called When Others See Fear, We See Opportunities, and was talking about stock market crashes and how those are going to be the best times of your life because you're going to be able to get everything at a discount. And you can use these same skills of technical analysis in other markets. I hope you understand that. Now, again, the process is a little bit different in my opinion. I'm fully technical as a trader, meaning I don't really care about the fundamentals at all. I do think the fundamentals are important if you're going to be an investor. I mean, you want to have a fundamental bias first and foremost, and then you want to use the technicals to back it up. For example, if you're looking to buy the Dow Jones here, you want to have that decision that, hey, I want to buy it. And then you look at the technicals for your reason to buy. So for example, I would look at this and see, hey, I want to buy this up. Okay, now how and when can I buy it? I've got a double bottom at previous levels of structure looking left. This is the perfect opportunity to buy it if you want to take it like that. Or you can take another approach where you're just, if you value something, you're just consistently purchasing it over time, right? We have a consistent routine of when and how much you put into the market consistently. You're basically just you're averaging into your position over and over again. But as traders, right, we want to think different, and I know you guys on the platform do. For you guys on YouTube, you want to think differently than the mass public, because the mass public is typically wrong. They're typically late. And I had a good example over the last couple months with this coronavirus outbreak, and it's funny, the buddy of mine that taught me, or that introduced me to Forex, I started off in the stock market, and I had a very simple approach. It was called a common sense trading approach. It was old school. I was taught by this millionaire who said, you don't need these degrees. You don't need to have a, background in economics. You just have to have common sense. And that was something that worked really, really good for me. And at the time, I started trading stocks in 2007, right? So at the time, I didn't really know if I was good, right? There was a time where I thought I was overly cocky and I thought it was great, but then I didn't really know if I was good because looking back, I bought at a time where everything was kind of cheap and then going up. So I'm like, well, maybe it didn't take any skill. I could have done anything. But now that I'm older and wiser, I look back and I say, what I was doing did make sense. It was just that simple, not easy, but that simple. And what you look for essentially is the move within the move. So a good example is like, one of the first stocks I bought was Apple back at $99 before it split 80 million times, right? And I bought Apple, which was it was a pretty obvious reason, right? This was at the time when iPhones were coming out, right? And I was in college. Everyone in college had a cell phone. Everyone had an iPod. And I'm like, okay, well, Apple's kind of putting the two together. You can put music on your cell phone. That just makes sense. Buy it up, right? It made sense. Common sense. And did it for a few other things as well. But then looking for the moves inside the moves, you start looking for, okay, well, if you're buying in the Apple and you're buying into this iPhone craze, right? Let's start looking at who's making the parts for Apple. So I start looking into who's making the microchips, who's making the glass screens. And you can find some cheaper stocks like that that will kind of, if Apple's the elephant, these cheaper stocks are kind of riding on the coattails of that elephant as it rises, because as Apple does well, they'll do well as well because they're producing for it. And my friend that introduced me into Forex, right, because I thought I could make a lot more money a lot quicker with a lot less money, he's now doing stocks because we kind of shifted places. And he looks at a lot of stocks, and he always kind of refers to me for the technical perspective of it. And one that he was looking at with this coronavirus outbreak was Kroger, right? And he used to work for the Kroger company, so he kind of knows kind of what they make and what they don't make. And Kroger is one of the producers of hand sanitizer. And I don't know if it's like this across the world, but in the U.S., there's this big old shortage of hand sanitizer because everyone's going crazy. They're buying it all up. If you want to look for something else, look for oat milk. I haven't done any research on that, but oat milk is maybe that does the same thing as hand sanitizer. I don't know, but there's a shortage of oat milk now too because there's a massive demand for oat milk. So we're looking at hand sanitizer, and because of this coronavirus outbreak, we're doing this kind of early February, as this is before it was really like an outbreak in the U.S. We're just running through this process in our head. We're saying, okay, well, eventually this is probably going to come to America because that's just the way it goes. It just spreads everywhere. It hit the UK, it's probably hit America at some point. So let's talk about what's going to happen when it hits America. Okay, there's probably going to be a panic, right? The media is probably going to hype it up more than it is, but the people are going to panic, and someone's going to make money off of it, right? not to get too much into conspiracy theories, but that's how I believe these things are either covering up something else that's going on, or someone is making money. Someone's in the background saying, okay, let's get people nice and scared, and then we'll sell them this and make a lot of money off of it, right? That's, not far off in how that actually works. You look at like opioids and drugs, right? These people produce these drugs, you get addicted to it, and they sell you another drug to get you unaddicted to the original drug, but then you get addicted to the new drug, and they sell you another drug, and before you know it, you're popping like 18 pills, and they're making money on all 18 of them. But again, not to go too deep into that. So we're having this conversation, just using common sense. All right, so what are people going to do? All right, there's panic. You can look at your basic stuff, panic. People are going to get milk, bread, eggs, and if everyone gets quarantined, stuff like that. What else is going to happen? Well, these mask things. I don't really know much about the mask. And we're like, well, hand sanitizer, right? The little, because we have them in the store, right? The hand sanitizer. People are going to probably buy it up. He's like, yeah. And he's like, well, you know what? I used to work for this company. And they made these hand sanitizers. We started looking into Kroger, and Kroger was a pretty cheap stock. And we're looking at it right around probably here. It was early February. And what we were saying is, I said, okay, well, if you're interested in buying Kroger, just wait for the dip. Wait for the dip. Wait for the dip. And you see he got two dips right here, right? This was the original dip. This is right before we started looking at it, right? And price started to rise. And then some of the fear as the U.S. started, getting scares of coronavirus, or the fear that affected the entire markets started affecting Kroger as well. And then we saw this pullback in this nice, beautiful pin bar right here, right? And this is where he started buying it up. This is where he started buying it up. So when others are fearing, he's seeing opportunities. And so far, this opportunity has worked out very nice for him. But it's the same concept as technical analysis. Now, again, it has a fundamental analysis backing it. But if you look at this, right, this is no different than what? New structure high, outside return. New structure high, outside return. New structure high. This is your outside return, your pullback. This is no different than buying up a pullback in the market, kind of like we talked about with Euro Aussie, and then trading it up. Now, I don't know where he's taking it to, right? We have technical levels that can predict that as well. Probably up at, maybe 35, 50 or something like that. I don't know how he's probably going to pay attention to the outbreak and how it continues to get hyped up. But it's a great example of how technical analysis could be used in other markets in other ways as well. So even if you're someone that's, not a trader, you're more of an investor, a long-term that wants to take control of your finances, this is a nice approach you can take. Now, something else I recommend before leaving you guys is watch Jason Greystone just put out a video. I think it's called How Coronavirus Helped My Wealth. Give me a second now, and I'll kind of bring it up here for you. But it's a great video just talking about, just talking about the virus and kind of how he views it and decisions he's made. And again, kind of looking at it from a different perspective, where many traders are fearing and they're trying to liquidate assets and sell stuff because that's what people do when they're scared. How we should be taking the opposite approach, and we should be basically going into the store and saying that, hey, things are at a discount, right? This product that I liked that was $20 before is now being sold for $10. So what do? You buy two of them, right? Because you can get two for the price of one. And it's scary because you're going against the grain, right? Wish I had that picture. You're going, give me a second. I'll probably edit this in somehow, actually. If you guys remember the picture of the sheep I put up, where all the sheep are jumping off the cliff and there's one going backwards and everyone's looking like, what's wrong with that dude, right? This is how you set yourself up in a very profitable position for the future, because this virus scare is going to wear off, right? It's not a massive deal, to be honest with you, just like Ebola and all that other stuff. And when it wears off, what do you think people are going to do? They're going to flush back into the market. And there's going to be stuff that's cheaper. So they're going to flush back into the market at a very aggressive way. And that's going to push the markets up. And guess who got in at a very, very cheap price and can take advantage of that? You. So I don't know how we got on that rant, but I appreciate you guys listening to me. Do me a favor before you leave. Hit that like button. Share this video. Subscribe to the channel if you are new. I should have a midweek video coming out on greed and fear. So make sure you check that out. And also, thank you for you guys supporting the Trading Coach podcast. Despite the shortened month of February, we put in a new high in downloads. And I want to keep doing that. So you guys are creating some great topics. We're having some great discussions. And we're providing value and empowering people 3 times a week with that podcast. So I appreciate the support. Thank you. And until next time, plan your trade, trade your plan. Good luck in the markets this week. And I'll see you guys in the live room.